Welcome back. You're tuned into Bazaar Morning Call. Hope you're having a good Monday morning. Well, as promised, let's get straight to our first corporate on the show. Affle India, they reported pretty good revenue growth, while the profit surge aided by a lower tax rate. However, margins, they contracted a little more than what the street was working with. Mr. Anuj Khanna Sohum, the founder, chairman, as well as the CEO at Affle India, joins us on the show. Hi, Anuj. Morning. Thanks so much for joining in. Well, a couple of questions on the top line itself. The international business for the last 3 quarters or so, I think it was in that vicinity of around 225 crores to around 250 crores. Now we are bounced up to around 275 crores. Is this bounce in revenues sustainable? And also organic growth for the first quarter is around 17%. Earlier you were guiding for around 20-25%. Sticking to that?
Well, first of all, thank you for having me on your show. Today is actually a very special day. We complete almost the 4 years of our IPO anniversary. And I would like to thank all the stakeholders for, over 364,000 shareholders for their consistent trust and support to our company. Our results for this quarter have been actually quite resilient and robust. If we see it from the lens of India, as well as the global emerging markets and verticals, we have grown over 20% organically year-on-year basis in this quarter. And in the international markets also, I believe that the growth trend is very strong because we have strengthened and solidified our foundation in developed markets, especially in the US, where we have now the highest number of our customers, highest number of employees. And together with UAP's acquisition recently, I think we are stronger than ever before. So the confidence of our team to go out there convincingly win against competition is very high. So we are in a much stronger position today than ever before. If you look at it overall, this is our highest quarterly revenue, highest quarterly conversions delivered in the CPCU business at the highest CPCU rate. So it's a very strong result.
Got it. I think my colleague was asking you about the way forward. So if you can tell us what is the growth guidance that you have. Earlier, I think you spoke about a revenue guidance of 20 to 25%. Are you on track to do that? And can you tell us what are the trends, particularly in the India business?
See, in terms of the overall growth, from a profit after tax perspective, from a bottom line growth perspective, we are already 21+% in this quarter versus the last year. And I think it is reasonable to expect that over 20% profit growth in the whole financial year versus the last year is going to be sustainable, should be expected. And the fact that the top line wise, the international markets, US and developed markets, we have solidified our foundations. What I'm indicating towards is that we can build on that strong foundation and build sustainably profitable cash flow positive growth for our company going forward. As far as India is concerned, I think you would have also heard that recently the cabinet has approved budgets for inclusive internet penetration across 640,000 villages in India. I think that will help the consumer adoption of connected devices, and that will absolutely be a strong tailwind for next many years to come for our India business as well.
Anuj, are you seeing an advertising pullback in US and Europe?
I think in US, we can see the results of some of the big ad tech companies as well. There is already some positive signs. So what we can see is that the macro factors that were pulling us down for last several quarters, I think they are easing out. And also the fact that our own action plans have solidified our foundations there, we are in a much better position to have a more optimistic outlook going forward.